Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial secrets that big companies try to keep hidden. Tonight we're looking at how VSEE Health Inc. plans to stay listed on the stock market. You know how sometimes a company is on thin ice and they have to do some serious maneuvering to keep their head above water? Well, that is exactly what we're diving into today with VSEE Health Inc. Their latest filing is all about them proving to Nasdaq that they're a stable enough company to keep trading publicly. It is a nail-biting situation, and we're going to break down exactly what is going on. Before we start, if you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we discuss these filings in real time. So, what we're looking at here is a Form 8, which is basically a report for significant events. The most important event for VSEE Health Inc. right now is their fight to stay listed on the Nasdaq stock market, LLC. They got a letter saying they weren't following the rules, specifically because their stockholders' equity, which is like the net worth of the company owned by shareholders, had fallen below a required minimum of $2.5 million. As of the end of 2024, their stockholders' deficit was a negative $18,488. That is not a good sign, folks. Now, the company appealed this decision and they had a hearing. The good news is they got a chance to fix things. Nasdaq gave them a deadline, the 1st of December of this year, to show they've met the equity rule. They needed to publicly announce the steps they took to boost their equity and prove long-term stability. Nasdaq even suggested they could use a balance sheet that wasn't too old, with some special calculations to show how things would look after big financial moves. And that is exactly what VSEE Health Inc. is doing. They believe they've met the requirements by making some pretty significant financial adjustments. We're talking about the exercise of warrants, which means people who had the right to buy stock at a certain price actually bought it. Then, they converted a bunch of convertible notes, which are basically loans that can be turned into stock, and preferred shares, which are another type of stock, into regular common stock. They also exchanged some outstanding payables, which are basically debts they owed, into more stock. They're calling all of this the transactions. The really crucial part here is the pro forma balance sheet. A pro forma balance sheet is like a hypothetical financial snapshot. It shows what the company's financial health would look like if certain transactions had already happened. In this case, they're showing what the balance sheet would look like if all those transactions they just did were completed by the end of 2025. And the numbers here could be a lifeline for them. It shows a total stockholders' equity of $13.2 million. This is a huge jump from that negative $18,488 deficit, and is well above the $2,500,000 minimum requirement. This exhibit, which they filed along with this report, is their main argument for staying listed. This exhibit 99.1 is essentially their proof of life for Nasdaq. It is a pro forma balance sheet as of the 31st of December 2025. Remember, by the time this report is filed in late November 2025, they are presenting these hypothetical numbers to meet a deadline that is just around the corner. It is all about demonstrating future compliance based on these strategic financial moves. This unaudited pro forma balance sheet is the star of the show for this particular filing. It is not the audited confirmed financial statement, but it is what Nasdaq is allowing them to use to show they're on the right track. The key takeaway is that, on paper, these transactions have significantly improved their equity position. The last thing filed here is something called the cover page interactive data file. This is basically a way to make the filing machine readable, so computers can easily process the information. It doesn't add much to the story for us as readers, but it is a common requirement for SEC filings nowadays. Now, looking at this situation more broadly, VSEE Health Inc. is in a critical situation. On one hand, they've taken aggressive steps to boost their equity, demonstrating a willingness to do whatever it takes to remain listed on Nasdaq. This shows resourcefulness and a commitment to public trading. However, the fact that they ended up in this precarious position in the first place with a negative stockholders' equity suggests underlying financial challenges. The pro forma numbers paint a much brighter picture, but the reality of their actual audited financials will be what truly matters in the long run. The question is whether these transactions represent a sustainable path to profitability and growth, or just a temporary fix to satisfy listing requirements. The main risk here is that these equity-enhancing transactions might mask deeper operational issues. If the core business isn't generating enough revenue and profit, they could find themselves in a similar situation again in the future. The opportunity, however, is that by staying listed on Nasdaq, they maintain access to capital markets, which is crucial for growth. They can continue to seek funding, develop their products or services, and potentially turn the business around. In conclusion, VSEE Health Inc. has passed a crucial hurdle by presenting a pro forma financial statement that shows them meeting Nasdaq's equity requirements. This is a positive development for the company and its shareholders who want to see the stock continue trading. The future will depend on whether they can translate these financial maneuvers into sustained operational success and avoid future compliance issues. Alright, that is our breakdown of VSEE Health Inc. Its latest filing. What is your take on these numbers and what they signal for the company's future? Do you think they've done enough to secure their listing? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate finances. Don't forget to check out the Discord in the description to join the conversation. Thanks for watching, see you next time.